किसी भी शुभ कार्य से पहले, it's the lighting of the lamp, looking up to the deity.
Good afternoon, Irfan, Satish Dada, Baman, Mr. Patodia, and Mr. Garodia, Deepak. Ladies and gentlemen, it's a pleasure to be here today, and it's a delight to be F to F with you, which is the new lingo. This is the new lingo for the youth, face-to-face. So it's the first face-to-face meeting I'm having after a long, long time, and I've requested Baman that I want some distance, but I want to protect. I'm twice the age of most of you here, so I have to be more careful than all of you. But we hope that we'll give Zoom a little bit of a rest today, and I hope and pray that it stays this way. Nothing resonates more, nothing resonates better than Charles Dickens' word, in the best of times, it is the worst of times. Without doubt, the housing and the real estate sector is heading into the best of times. In over 50 years of my work life, I have never been as optimistic about the Indian economy or about India as a whole as I have been today. I have not seen housing affordability better than where it stands today. I have not seen such easy liquidity conditions and interest rates at such record low levels. And most importantly, I have not seen such a burning desire to be a homeowner than in these current times. Yet, we are uncertain about the trajectory of the virus. What next step will it take or it may not take? And it still leaves us in one of the most unpredictable situations faced in living memories. No one knows with certainty whether the virus has shifted from a pandemic to an endemic. We do not know how many more mutations or how many more viral waves could erupt, as you see what's happening in China lately, or whether we've just to accept and we have to live and coexist with the pandemic. But many of us, and in many ways, all of us have learned survival. Survival is adaptability in the current circumstances. How to survive in these difficult days, how to survive in the present circumstances. And often we don't give credit to ourselves that we have sufficient resilience amongst us. If I did not have resilience, I would not come here today. So perhaps it's a good time to put the past behind us. Right now, there is a lot of optimism in the air on the potential of the Indian housing and the real estate sector. This isn't a feel-good factor. This isn't a good talk. It is real. It is there. It is now. The Indian real estate market is in the cusp of a new growth cycle. And it is important that we make the best of it. Housing markets, as you all experienced people, developers know that it moves in cycles. And research suggests that for India, the peak and the trough of each housing sector, each housing market cycle typically entails a duration of 6 to 8 years. The last peak for housing sector in India, you will recall, was 2012-13. And then the triggers for the decline happened. What happened was impacted affordability, tight liquidity situation, developers finding themselves acutely over-leveraged, coupled with projects starting to get massively delayed on a large scale. This is fortunately history. We all know this. The point to remember is that it takes 6 to 8 years to get back to an upward cycle. And right now, we are there. We have the means to catapult it into an upward growth cycle. Invariably, it is the real estate sector. It is real estate investment that leads increase in Indian economy. It starts with the real estate and then it follows with other capital expenditure and the other sectors across the broader economic cycle. In short, the multiplier effect pays out. We are the multiplier. Yet, on this upward cycle of the housing market, we need to be careful. We need to be extra watchful and do not repeat the mistakes of the past. Do not repeat the mistakes of the past. I have a few off-the-cuff thoughts that I'd like to share with you on the housing and real estate sector. Now take global house prices. Global house prices are soaring. The big question is, what makes India stand out as an exception in point of time in today? The International Monetary Fund comes out regularly with the Global House Price Index that tracks house prices across 60 countries. Its latest report said that in the year 2020, there were only 3 countries where the housing prices remained steady. Every other country, there was gone up significantly. The 3 countries are India, Philippines, and the United Arab Emirates. That was in 2020. Across developed markets in particular, intense house buying spree in the early days of the pandemic resulted in soaring home prices. Housing inventories are at historic lows in advanced economies, and there continues to be a shortage of building material, but particularly labor in developed markets. Common practices were there in the US and Europe where blind bidding was happening on homes, and also this led to overinflated home prices. Home inequality between the haves and the have-nots increased and became the new fault lines in Western politics. In fact, there were uprisings in certain countries. There were revolts by those being priced out of the housing markets. Clearly, this is not something one would have envisaged from the so-called advanced economies, but this is the new reality. Now take China as another example you are all familiar with. China overbuilt, over-leveraged real estate, and the fallout of Evergrande and some others is a stark reminder that reckless borrow-to-build model no longer works. Borrow-to-build recklessly doesn't work. The real estate market in China, believe it or not, contributes 25% of their GDP. 25% of the Chinese economy is real estate, both real estate, housing, and offices. Evergrande's debt, if you don't know, it was $305 billion, and translated into our currency, it is 23 lakh crores. Does anyone even have 1 lakh crore outstanding in this group, or 50,000 crores outstanding in this group? This is 20 lakh crores. The choices for the Chinese government was allowing the company to fail, which would have a contagion effect on the entire Chinese economy, or ensuring that the big daddy rescue packages, because the entity is too big to fail. It's too big to fail. But with a fragile recovery, another 2008 like global financial crisis had its roots in the housing sector in the United States when we had these mortgages and securitized mortgages going bad. So we hope that we are not getting there because we have to be careful about that. And China is a leading example that they are probably getting there. India, we are very, very fortunate that we don't presently have any housing bubble troubles. There is no housing bubble now. But we should not be congratulating or thumping our chests yet. The fact is that inherent demand for housing remains immense. It's the people on the street, people who want housing, their demand is there, that's why we all survive. And concerted efforts have been made to ensure supply at the right price points to meet the needs of various income groups. And here I think all of you will agree that we should give some credit. Credit should also go both to the central and state government for enabling provisions for the housing sector, whether it's continued fiscal incentives, whether it is Pradhan Mantri Awas Yojana, whether it's cash-linked subsidy scheme, whether it's concessional stamp duties in some states, premium reductions for a certain while in certain states, and several other measures. And the credit must go to the central and state governments for recognizing and allowing these incentives to be given to our sector. In equal measure, we should also be thankful to the Reserve Bank of India for its accommodative credit policy, monetary policy, and comfortable liquidity conditions also helped tremendously. In the good old days, they gave some line of credit to the banks for on-lending to housing companies, which helped the financial position. So I sincerely hope that the government will consider a CLSS cash-linked subsidy version 2.0, because to my mind, it has been amongst the best executed and impactful government scheme, where a first-time homeowner gets a certain amount of money from the government. While the upfront subsidy for the economically weaker sections and the LIG group is still on and it expires on March 22, but the government has removed the subsidy for the middle income groups. But the middle income groups also are a group that requires a helping hand when they're buying their first house. But today that subsidy or that credit scheme is no longer available. It is important that both financiers and developers continue to keep their foot on the accelerator as far as affordable homes are concerned, because this is where the maximum demand is. Earlier, there were a lot of potential home buyers, and a number of you have mentioned this to me, that the home buyers were fence sitters. They would sit on the fence because they did not know whether the prices will go down or no, because there was a view that prices are going to collapse. So why book? I know people who, even when they bought a house, they wanted in the agreement that if you sell a house cheaper than this, you'll refund the money to me. That's how some sales also happened. Now I feel that the stable property prices have converted many of them who were fence sitters earlier into actual home buyers. Those that had jobs could be seamless, and jobs that could be seamlessly done online thrived during the pandemic. They did extremely well. And they're the ones that have seen their incomes rise, their savings rise, and have greater accumulated savings. Work from home, study from home created demand for larger homes. And those not financially impacted by the pandemic were able to either shift from rental homes to their ownership homes or move up the property ladder and take a larger home. The other reason why I'm optimistic about the future is that while home sales have been happening, the real shot in the arm has been the recent pipeline of new projects. Every day in the newspaper, when I wake up in the morning, I see full-page ads of developers. Not one, but 4 or 6. And I know that new projects are being launched by a number of you people sitting here in the audience. And this gives you a stamp of confidence. You are launching the projects because you have confidence that they will be sold. You will be able to complete and they will be sold. So this is a good, and we do not have scarcity of labor. We do not have like other Western countries. A key lesson to hold is consciously guarding against excessive construction at price points which are beyond the reach of the common man. The most fatal financial mistakes always happens in good times. Baman, please remember, all bad decisions are taken in good times. Simply because I never tire of saying leverage is a double-edged sword. Leverage amplifies your profits in good times, but it destroys you during a downturn. It kills you during the downturn. The velocity of sales need to be faster, which will help you to calibrate more cash flows into the company for repayment of your borrowings. Home buyers, I keep advising home buyers that this is the right time for you to seize the opportunity and book a flat. Low interest rates are not going to last forever. Even though one does not expect a significant increase in interest rates, just today in the morning I read that UK has increased their mortgage rates. All the big banks in UK have increased the mortgage rate. When I was in United States, I saw people borrowing 30-year loans at 3% fixed. 30 years at 3% fixed. For a home buyer, it's a given. It's a win-win. We are never going to get to that situation, but in Europe and US, the rates are so low today, so low. It is amazing. But they've started going up, and in India, I won't be surprised if interest rates increase marginally, because the factor to consider is inflation. Right now, the assessment is that higher inflation is more transitory than permanent. It's a short-term phenomenon, it's not a permanent phenomenon. But if this stays over a longer period of time, energy prices are high, gas prices are high, coal prices have doubled. So energy prices have escalated significantly. It would mean that higher inflation is here to stay. It's entrenched in our economy. It is not temporary, it is not transitory. In which case, there will be no option but to increase interest rates. The monetary policy will be changed and interest rates are concerned, and you will see an upward trend of interest rates. The uncertainty now is that input prices, especially commodity prices, have moved up. But this is still being attributed to the pandemic and short supply and pandemic-related bottlenecks. If these supply bottlenecks are not unwound, it will become a dampener. And a calibrated increase in property prices can be easily absorbed. But sharp shocks cannot be. Marginal increase in prices can be absorbed because the demand is good. But sharp increases should not happen. The pandemic reiterated and confirmed that there is no greater security than a home. I think everyone realized that no security better than a home, whichever strata of society you came from. For many developers, the pandemic also provided a leeway to be able to recalibrate, monetize assets, offload existing inventories, and deleverage. It was a good opportunity. But again, I know many developers who are willing to sit on their land parcels. They don't get construction finance, so they don't build. They don't monetize their assets because their expectation is always high and never comes down. And they keep borrowing at exorbitant rates from foreign firms. And they solve their short-term problems, but they are creating very long-term problems for themselves. The common man today is not willing to place a bet on any developer other than select A-grade developers. This is another change that we see, because many of them have been burnt. These developers are defined not by the scale of their operation. They are not defined by the balance sheet size, but whether they have upheld their promises, whether they've upheld the track record of timely delivery, and whether they've been able to tie up the funding at the start of the project, not while the construction is going on. So they can't be fully dependent on sales to fund their project, because then if the sales slow down, then the project slows down. In short, a developer's reputation is everything in this business of yours. This may be a bitter pill to swallow, but the truth is that especially in the key metro cities, where bulk of the large-scale projects are, there are not enough grade A developers. We need many, many more grade A developers. This is not a blame game. Financials like us have also made our mistakes and in funding certain projects. But when it comes to incremental funding for construction finance, who does one trust and who one doesn't trust? This is a moot question. So the trio of developers, financiers, and home buyers are all closely interlinked and hugely interdependent on each other. While we need to be most mindful of the trust, when trust gets violated, amongst this trio, everything else spirals out of control. Confidence is lost and everything gets to a big zero. So trust is so important that you develop this trust with the financing agency as well as a potential homeowner. Unequivocally, we need more homes. We need more commercial premises. We need more construction for the Indian economy to grow to its true potential. And credit growth has been very tepid during the last 1 year. Credit growth of the banking sector has been 6 to 7%. We need credit growth to be double digit if India has to grow faster. So it is imperative that banks and non-bank finance companies continue to support the credit needs of the real estate sector. So what are the options? Construction is key to building India's overall growth and is a big contributor to India's prosperity. We need many more responsible developers to be able to execute infrastructure projects, real estate projects, some redevelopment projects, ordinary redevelopment projects. We need more housing to cater to the changing needs of commercial spaces also, like you have office and data centers and fulfillment centers, industrial parks, warehouses. There's so many new needs that have come up. For developers like you have to focus on 2 R's, reputation and resolution. If you are in trouble, you have to resolve immediately. Don't be wait till the prices go up or something. Reputation, resolution, these should be your 2 mantras. Both go hand in hand. Choose a resolution path that bails you out the fastest, not necessarily the path that maximizes your return. This will hold you in good stead in the future. A defaulter tag is very hard to shake off. Once a defaulter, always a defaulter in the minds of a lender. Financial regulators are not willing to look at real estate financing. We have tried number of times that real estate is different from industry lending. The land is a big security in real estate. Why should we should have only 90 days provisioning. But the regulator says 90 days means 90 days. And we can't go against that. 90 days overdue is sacrosanct, whether it's industrial, individual, or real estate. In most cases, lenders, we have the hard security of the land, which is 1.5 to 2 times. But financiers have no choice but to respect the views of the regulators. So adequate provisioning needs to be made. Incremental funding to these projects cannot be done. If a non-performing loan is there to a developer, whatever additional money we give as last mile funding constitutes as a non-performing from day one. So you can't lend to increase your NPAs. If a third banker lends, or if a third party lends, it becomes NPA for him also. So this is such a vicious cycle that once an NPA, you cannot finish the project unless you sell monetize your assets, increase your liquidity and fund the project. Because no one will fund you once it's an NPA. Anyone else can't fund it because it becomes an NPA immediately. So it is estimated, this may be completely wrong, that 1.3 lakh crore or 18% of overall lending to real estate is under stress. This is the figure come out from some survey RBI. It's a large number, 18% of all real estate lending is under stress, not necessarily NPA, under stress. But this includes old legacy projects also. Fortunately, there are more resolutions falling in place. And they are the stronger developers who come in and enter a project midway and help all the lenders like us and other banks to take over a project which is stuck and complete the projects. And global investors, particularly pension funds and sovereign wealth funds, are also seeing an immense opportunity in investing in Indian real estate sector to counter their negative yields or low yields which they get in their own countries. So alternate investments funds focused on real estate, you know all these companies which are running around India to lend to you at high rates, but willing to lend to you. So asset construction is something which is knocking on the doors of the regulators for approvals. For instance, Brookfield and HDFC have entered into a memorandum of understanding. We want to start a dedicated ARC, Asset Reconstruction Company. And this partnership is important because Brookfield is one of the largest alternative asset managers in the world. We need such investors with deep pockets. We need such investors who have patient capital. We have been waiting for regulatory approvals. But once such approvals come and are forthcoming, I am confident that it will be a win-win situation for all. We don't need one ARC, we need many ARCs, and many asset reconstruction companies are bound to come. Once the Reserve Bank comes out with some guidelines of the need of capital and provisioning and all that. So we are waiting for Reserve Bank, and hopefully we hope to get it soon. Developers will get access to last mile funding if ARCs are there. Existing financiers, having already provided for such loans, will have options to sell bad loans seamlessly and focus on incremental lending rather than be consumed with legalities and technicalities of resolutions. And it will facilitate a new cadre of much needed professionals with real estate expertise to resolve such loans. World over, these are accepted modes of financing. Accepted vehicles of financing are ARCs, so we need to catch up with the rest of the world. So lastly, to conclude, the real estate sector is seeing a radical changes as demand for more smart and green buildings gain traction. I hope you guys are doing some green buildings, Maman. India's stock of new grade A commercial buildings are impressive, as most of these are green certified buildings. The demand for affordable homes, affordable smart and green buildings is percolating towards the residential sector as well. Currently, under 5% of India's buildings are certified as green, only 5%. But this will rapidly change due to the both push and pull factors. One significant change that I foresee in the housing sector in India is that it will be increasingly driven by India's millennials, and they are called Gen Zers. This cohort comprises of a growing number who have well-paying jobs. They are young, across IT, e-commerce, professional services. We have a mushrooming number of entrepreneurs, startups, unicorns, and soonicorns, soon to be unicorns. This present generation that is embracing sustainability more than all of us did, and will demand to live in green buildings, will increasingly want facilities for electric vehicles, will need access to renewable energy sources, will want homes that are completely tech-enabled like AI and Internet of Things, and designed to enable futuristic retrofittings. They are armed with higher incomes and increasing aspirations. I believe the Indian mortgage finance sector too will change significantly with younger home borrowers compared to what we have experienced over the past. Like over past 40 years, our average age of a home buyer is somewhere between 35 to 38. I expect that this is going to come down to the late 20s and early 30s, as is the trend globally. You get a first job and you get a home. It will happen, it is happening. We see a slight decline of the age of borrowers, and with more younger entrepreneurs and professionals, you will see this happen. The only danger is if you price yourself too high. I know some young people who are saying, why should I buy a 10 crore flat when I can pay 1 lakh rent a month? So there is a disconnect between rental and you have to ensure that the price is reasonable, otherwise younger people may just take it on rent. So this is a new group that developers, you all need to cater to. This customer segment are digital natives. And so developers, you all have to become digital experts and reorient your ways of interacting with them. The pandemic has helped us, pulled our future forward as far as digitalization is concerned. 65% of India's population is under the age of 35. That's the captive audience for you in the future. And the huge population, young population, aspiring, confident of the future for themselves, all of them will be looking for homes to live in. This is our best reason to be optimistic about our future. Developers in particular have time and again displayed their resilience. You have survived the worst of the pandemic. You have survived financial crisis. You are still laughing. You're still here. You're still hopeful. So, and changing regulations. We have all adapted ourselves to changing regulations. We have the resilience, as I said. As I said, we don't give credit to ourselves about the resilience we've had over the years. We have seen every change of weather, be it good or bad or ugly. So I have no doubt that you all will tide over the present hardships if you have any at the moment. The other thing I'd like to say about CREDAI, it is time for you to take a step forward, to write your own rules and on responsible and sustainable building norms. Currently, various states offer different incentives. Some are giving you higher FSIs for green building. Some have concessional property taxes or municipal charges or other such incentives. Perhaps there is a need to have one uniform code on a pan-India basis or to encourage more green and sustainable buildings, because that undoubtedly is our new future. Embrace these changes and make responsible development and construction your new mantra. Responsible development and construction your new mantra. Thank you for inviting me, and thank you, Boman, for forcing me to come here, for twisting my arm to come here, and wishing each of you the very best for the upcoming festivities. Thank you.
Thank you so much, Deepak ji, for these amazing words of wisdom. Would request Bowman to please felicitate the gentleman.
So, very quickly, if there are 3 or 4 questions, I think Deepak Bhai will be ready to take them. I guess there are none. There is one, and there is one behind. Can I give this mic?
So very enlightening talk. So we are facing a small problem as a fraternity. You said there's going to be inflation because of increase in fuel prices and coal, and it's here to stay. We are faced with a problem where, we have sold stock which is under construction, and we are not allowed to charge escalation on that. Escalation on that as per ERA. There's been a wholesale price index increase, but we are totally, we can't do anything about it. Now the stock we have left, we'll have to cross-subsidize the increase in construction costs because with that only. So isn't it imperative that there'll be an increase in prices going forward, sir, considering that inflation is here to stay? We have no option but to do that.
That's what I said. Marginal increase in prices, I think the market is ripe enough to absorb that. But very steep increase in prices, you won't be successful.
Correct.
And you have to also be careful that you want the demand. You don't want empty homes. So as long as you collaborate yourself and be increase in some prices to a modest level, I think market will accept it. But everyone today has a mentality, what price did you sell the earlier flat at? They want that rate. And even if they bought it 6 months ago, they want the same rate.
That is not possible.
But that is not possible, and that is what they must understand.
Or, sir, we should be allowed to charge escalation like infra projects are allowed to charge.
Yeah.
We should be allowed to charge escalation as per the wholesale price index.
Maybe you can put a clause in the agreement if RERA approves it.
We'll have to go back to Parliament for the bill, sir.
Oh, boy.
Sir, a small change out there. The customer who has bought a flat doesn't want it at the same price. He wants the price doubled. So that whoever is coming in has to pay more.
That's true.
Every real estate purchaser wants to be the most intelligent.
The new buyer wants it at the old price.
That's true.
I would like to ask one question. Sir, the business model of real estate has undergone a major change. From a front-ended model, sir, it's become a rear-ended model where the customer wants to get into a project at an advanced stage or maybe ready to move in. So that would warrant a major rethinking in the way projects are being financed. And we need to prioritize that the money which is there in the project goes towards construction. So this model and ecosystem has to evolve, sir, against the current ecosystem where a lot of calculation is made on pre-sales, pre-booking, and even SIs are based on the financial exiting the project before it gets over. I think, sir, this system, maybe CREDAI or some fraternity in the financing sector should get together and evaluate how, going forward, we can address this kind of a change which is going on.
Oh, I think we can sit with you to think what to do in the future. But, you take, for instance, you are building a factory to make soaps. You have a project cost and you have funding, which matches the project cost. And by the time the project is ready, the money is drawn and your revenue starts. Now here, if you have to finalize your project cost and get funding for the full amount. And as I said, don't depend on sales to fund the project. Most people depend on sales. So find out the project cost of one project, get the fund total, draw it over a period of time. But don't sort of depend on sales to fund the balance construction. Because if sales slow down, your project will slow down, and then it's a vicious circle. So you have to fund it like an industry. Project cost, means of financing. Equity, debt. That's the way you have to do it.
Okay, yes, that gentleman, boliye.
So, as you said, it's the only affordable housing sector which has been impacted the most in the last 18 months. People who can afford are upgrading to bigger houses. So, what is it as developers, as housing financial institutions we can do? Because this is the sector who has been most affected. Their salaries have cut, their down payments, the savings that they had, they do not have them, possibly do not have the money for the stamp duties. So can we do something about this in this scenario so that we can revive this sector which is unable to come up easily?
The informal sector has been very badly impacted. And the informal sector needs to be supported because they've lost their job, they've lost their small businesses, whether you are a travel agent or you are a restaurant owner or a small scale. But things are getting back to normal all over. In Delhi, it's very normal now. The cases have come down significantly. I think Bangalore, Ilfan is also better now. Bangalore is better, Pune is better. And most larger cities have managed to contain. We just have to worry about post-Diwali. We just have to worry till the end of November, third week of November. If the cases rise significantly, we are again in a bad shape. Because you see, don't forget, even in England, you have 40, 50,000 cases a day. United States, there are 50,000 cases a day. Soviet Union, there are 50,000 cases a day. So they are saying it's the second wave. Some are saying it's the third wave. Now, vaccination. We should try and get all our family members, all our employees vaccinated as fast as possible. And now, today, we have started a booster service also. Take a third shot if you've taken 2 shots. We have to do everything together to avoid a third wave. We don't want to derail ourselves now that we have come on an upward trajectory. And affordable homes, I agree people have lost jobs, but I think they'll get back the entrepreneurial, the hardworking nature, the will to survive is there amongst the Indian population, even the poorer sections of our population. So I think things will get back to normalcy.
Thank you.
Ira, you have a question?
Kumar, you are laughing to the bank. You don't need to ask a question.
No, I'm asking a question on behalf of all the others, nothing pertaining to me per se. Deepak, do you think that there's a time that we should start looking, the A-grade developers of India should start looking at development in the global markets? When will we be ready to start doing development in different parts of the world where there are huge opportunities also? And just like industry went out and foreign exchange reserves built up, is there a time coming when we could be doing that, and which countries and which areas, where are the opportunities? Can, some people get together to start thinking on those lines also?
Oh, when I go to some parts of the world, I see Indian developers, particularly in the Middle East. You see Shobha, you see different developers. Hiranandani, Shobha. In Dubai, there are so many Indian developers. So, Kumar, it's the same thing. Indian financial system or the Indian banks, we don't have a branch outside, but Indian banks have enough money to lend internationally to Indian parties. So when an Indian entrepreneur goes abroad, he takes his banker with him. But he does the same way as an industry. So you have to think on the way that you are setting up an industry. A project, cost, equity, debt. Then the Indian banks who have branches in elsewhere will support. Someone's gone to London, and they've been reasonably successful. It's not that you have a small unit in the US. So I think you have started on the US and the big markets. I agree, there are big markets all over. And, but you must have your own depth of equity. You can't borrow 100% and try and set up something overseas because that will put you in danger. You need to put some of your own earned money. Yeah, same thing here. So it's something like that. But there are opportunities in the Middle East area for sure in different parts.
Okay, I think it's time to move on. One last question. Okay, can we have the mic delivered to the gentleman over there? Please give us your name.
I'm Ashish Agarwal. I'm here from Delhi. So, sir, I'm picking 2 points from your words of wisdom. One is that the bank has already got 2 times the securitization, and it's the regulator because of which we are not getting the financial closure. So, and the other thing is that once the product is ready, we all know as developer, as lender, that we are able to sell. Like no residential stock is, like if it's a good delivery, it gets sold. So the problem is that when a customer gets a housing finance, it's that 6.97%. For building the same product, because the customer does not have the confidence in an under construction project, I'm getting the loan at 12%. So earlier, the same fund which I was getting routed through the customer because the sales were very good on an under construction project, which is not, the scenario is not the same right now. So why can't institution which has the confidence on an A-grade developer plus so much security on the land give the same fund of the housing loan to the developer so that he's able to manage his deliveries?
No, I entirely agree with you. There should be parity, but you become an A-grade developer, then you'll get it.
So,
you know, if a Tata Housing comes to us, the rate is different. Or if a Godrej comes to us, our rate is different.
No,
because
sir.
they have strong balance sheet and they have demonstrated for 50 years their track record.
Sir, you said something that A-grade developer is not a developer who has a big balance sheet. He's the one who the customer has trust on. So if I go back to my area of working, I have some people from HDFC, they know me very well. So we have just closed your construction finance loan earlier than the time, and we never took any advantage of any like the COVID times and everything. Payments has been on time.
No, but most of you are borrowing from these international companies at 18 and 22%.
Not at all, sir. Only HDFC.
I'm shocked to hear because I know half a dozen or more developers who borrowed from these. I don't want to give the
only
names.
finance I had from HDFC, which is closed now. But in starting a new project, my problem is that I need the same support from HDFC, but at a lower rate, so that if the customer is getting the confidence on a ready product, then the same fund which he was getting and was routed to me, I can get that.
See, the other issue is pricing for any product goes on competition. There's massive competition amongst the banking and non-banking finance to give individual loans. There is no competition to give construction finance, because their banks are reluctant to give construction finance. NBFCs are reluctant because of their past experience. So it just shows that you have to have greater trust. As the lenders have greater trust, they will bring the rates down.
Sir, with that, I would just like to say 1 or 2 things. One is that be certain that every developer has a blood group that is B positive. We are generally positive. Second is, I'm surprised that Ashish asked a question that only said that you know, the home loan rate and our borrowing rate should be the same. He should have said our borrowing rate should be lower than the home loan rate. but that is the way we ask. And when we go to government also, that is our ask. I take very well from your talk that, you know, we need a unified rule, or unified rule at least as far as environmentally, you know, good construction is concerned, additional FSI, etc. Perfect. We keep asking the government for unified rules, even from environment side itself. Why can't all the states have a similar rule, and why can't we just have a simpler way? Because the quicker that we turn around a project, the happier you will be, and the happier the consumer and us, all three will be. So I just want to say thank you.
No, I just wanted to say one thing which I control myself, but I can't control now, that you're one industry, real estate industry. Why Naredco? Why CREDAI? Why something else? Why can't you become one? Your lobbying power will be much more, and forget your egos at home and become one real estate corp.
Wow.
We appreciate, sir, and we will carry your communication across to them. But once again, a big thank you, and everybody from a Kumar Gera, who is the doyen of our industry, to a Sunny or an Anay sitting behind. I saw rapt attention. That is the power of Mr. Deepak Parekh speaking. And sometimes we always believe that you're somehow able to predict the future. And we are glad that you said a lot of positive stuff today. So once again, thank you. I'm glad I twisted your arm if I did, and had you here because our entire fraternity stands to gain from your advice. A small token of our appreciation from one Deepak to another.
Shri Deepak Parekh, Chairman HDFC. We are honored to have your presence at the CREDAI Financial Conclave 2021. We are grateful for all the young mind of today, and you have impacted with your words of wisdom and inspiration. We present this small token of appreciation to you with utmost respect, admiration from the entire CREDAI family. Best regard.
Thank you. Zordar Taliyan, please get your hands together.